All right, guys, we have Linda, and prior to starting her business, she actually helped companies do their business from bookkeeping to financials to the financial projections. And right now she helps entrepreneurs, creative entrepreneurs, help them with their finances and build a life that they love. All right, Linda, take it away.
All right, just one moment. The best laid plans. Oh, what? I have to share my screen. And then, all right, can you see my screen?
No, on the bottom, there's a green button that says share screen.
Right.
There we go.
Okay.
And we just see new tab. We don't see your PowerPoint.
You see it now? Mm-hmm. All right, best laid plans. Hi, everybody. So I just wanted to introduce myself a bit. I've had my business for over 30 years and had worked in corporate for about 10 years, burned myself out, had a dream of living and working in Europe, and ended up getting my MBA in Switzerland. And somehow I knew that my willingness to work over 60, 80 hours a week had something to do with low self-esteem. So I wrote my thesis on how to do that, how self-esteem impacts one's ability to really maximize your potential. So what I've learned over the years is that most people would rather talk about their sex life than talk about money. Does that sound familiar? And I've also noticed that budgeting has gotten a bad rap. People fear being controlled, react to authoritarian shoulds. They don't want to look. There's often a sense of shame around money. And that their fear is that it will limit their freedom and keep them from doing what they want. So just feel free to jump in with questions if you have any along the way. So what happens when clients don't look at their finances is that they end up in a financial fog. And if you've ever driven in fog, you know that it's really hard to see where you're going. And financial fog causes a lot of financial stress. A lot of business owners talk about they can't sleep at night because they're worrying about how they're going to meet payroll, cover all their expenses. It shuts down one's intuition, creativity. There's a sense of, a tunnel. You can't see options. Overwhelm. Oftentimes business owners don't have a plan, and because they don't have a plan or priorities, they're working all the time and not getting a lot of traction. And then there's self-doubt, undervaluing oneself. So what I find is business owners tend to work so hard at making more money that they leave themselves out of the picture. And a few years back, I came out of meditation and was called to look at the definition of prosperity on my iPhone. And it was what I have typically seen, to thrive or flourish, especially in financial terms. And there was a link at the bottom of the screen for the Latin root word for to prosper. And the Latin root word for to prosper means to make happy. And somewhere along the line, someone decided that money makes you happy. It's certainly a part of it, but it's not the total solution. And so the question of how much money is enough to support your vision of happiness and success is really what I find relevant when it comes to growing a business. So I came up with this concept of money mojo, and it's really about how I see the creative process works. That if you know where you are now, if you're grounded in where you are in your life, in your business, in your finances, and you let yourself want what you want. And what it does, if you hold the tension between the two, is that it sets up a creative tension that seeks to be resolved. And so you start asking different questions than if you're just focused on where you are now or just focused on what you want. And what I find that's in between those two poles is a lot of yeah buts, challenges, and questions, and some obvious next steps. And the next steps really help you get moving, and writing down, defining the yeah buts and challenges and questions really helps because it gets it out of your mind and you can see what's old tapes, old beliefs, and you know, legitimate challenges and questions. And so, you know, the power of financial clarity is that it gives you peace of mind. You can sleep at night. You get traction because you see what actions are needed. And ironically, your needs get met, you know, as opposed to staying in financial fog. So we're all on a road trip called life, right? And what I see is that a budget is a financial fuel gauge. You know, not many of us would drive around with a broken gas gauge. And, you know, so many people live their life and run their businesses without a sense of how much money they have, how much they need to get from where they are to where they want to be. And so the question is, how much financial fuel do you need on your road trip for life? So when you look at budgeting as a financial fuel gauge, and you start with where are you now and what do you want and how much money is enough to really support your life and, you know, for your business to thrive, when you're clear about that, you can define how much money is enough. And a budget really helps you decide where you want your money to go before you spend it. So it puts you much more in charge than if you don't know that. It helps you set revenue targets and pricing. And again, it truly will give you peace of mind and traction. So what are the business and financial tools and practices? What I've found over the years is that it's helpful to look at it in terms of, are you looking out your rearview mirror or are you looking out your windshield? And looking out the rearview mirror requires an accounting system, something like QuickBooks, Xero, or the like. And really an accounting system helps you look back at where you've been. It's more of a historical perspective. And that's very useful, but it doesn't, and it can inform where you're going, but it's not the whole story. You can get valuable reports such as, you know, the financial profit and loss statement, your accounts receivable reports, accounts payable reports. The key is to look at them frequently. You know, so many business owners I work with get their financial statement from their bookkeeper, and it goes directly from their hands to their tax preparer. And if you learn to use your financial statements, they can really become a navigational tool and help you see trends so that you can respond proactively rather than reactively. If you have a budget, then you can compare budget versus actual as you go along. And I had a client many years ago, and I told her or suggested for probably 2-3 years that she create a budget. And she was always very resistant. And then she finally agreed. And it was really from that point forward that the financial statements really started to make sense to her. You know, she had thought through what the revenue should be, what the expenses should be. And so when it didn't match up, she said, why not? What's going on? And then, of course, for tax preparation. So looking out the windshield, you know, an annual budget helps you see where you're going. How much money do you need to get where you want to go? You can look at different scenarios. And then, you know, the monthly, weekly cash flow projection is also really essential. It basically allows you to see week to week ahead of time what you expect your cash flow to be. And, you know, a lot of people I work with, you know, have underlying issues around their relationship with money. And so it's not exactly a tool, but it certainly is a practice and something useful to do to really look at resolving and developing a healthier relationship with money. And then defining your salary. How much is enough to support you on a personal level? So often what happens without a budget, without cash flow planning, is that the business owner ends up getting what's left over. And without, I call it the WIFM factor, the what's in it for me factor. If the business owner's needs aren't being met, there's not the kind of creativity needed to actually make it different. And in business planning and setting revenue targets, looking at your pricing, are you charging enough for your services? And then really coming up, you know, if there's a gap between where you are and what you want on a financial level, you know, it's what are the strategies, what are the tactical action plans that are going to help you bridge that gap? And then tax planning and retirement planning. So that's kind of an overview of how all those pieces fit together. And then what do you budget for? Again, it's really important to get the clarity on a personal level as well as a business level. Oftentimes with business owners, I see that they have the financial statements and so forth on the business level, but their personal finances are a mess. And so it's really important to get clear about your personal finances. I like to look at expenses in terms of chunks, like monthly bills, auto pays, transfers. So they're kind of your fixed kinds of expenses. And then monthly other expenses are things that happen monthly, but you don't get a bill. You know, gas, food, etc. Then there's debt payments. And the one that often gets is a surprise for people are the non-monthly expenses. You know, taxes, cars break down, equipment breaks down, those kinds of things. And even though they're often unpredictable, they're predictably unpredictable. And you really can come up with a pretty good guesstimate of what they are and then start to save accordingly. And then the savings, again, for non-monthly expenses, retirement, big ticket items. And it's really the same process for business, except it includes your salary direct costs, cost of goods sold, and I'll talk about that more in just a moment, payroll, and the rest are all the same as the personal. So here's a way to think about your salary, to come up with what are your known projected personal inflows. You know, maybe income from a partner or a spouse, savings, Social Security, you know, other sources of known personal inflows. And then come up with your personal outflows, your auto pays, your other expenses, debt payments, non-monthly, and then savings. And you total all those up and subtract line 5, your total known projected inflows from your total known projected personal outflows. And that really helps you define a minimum salary. And I recommend doing this on both the level of, you know, what's your minimum and what would it be if you're really thriving, if you were living in the way that you'd like to become accustomed. So on the business side, there's direct costs. They're also known as cost of goods sold. They vary with revenue. Way to think about it is if you didn't have the revenue, you wouldn't have the cost. And then gross profit is what's left over after you pay your direct costs or cost of goods sold. And a really important calculation is your gross profit percent. It's your gross profit dollars divided by your revenue. And this, you know, really needs, you can either take it from historical data or your best guess of what that would be. And, you know, with the whole budgeting process, if you've never done it before, it's better to make your best guess than to not do anything. And then there's operating and capital expense, and then your salary. So these are all the things that you need to be thinking about when you're creating your business budget outflows. So hopefully your eyes aren't glazing over yet. So your operating and capital expense plus your salary ends up, being your total business outflows. So that's the number that you need in order to back into your break-even income. So how do you calculate break-even income? So before I talked about the gross profit dollars, you know, your revenue minus your direct costs. How much does it cost you to generate the revenue on a per client, or, you know, on a kind of an average monthly or yearly basis? And then your gross profit percent. And if you add your operating and capital expense together plus your salary, and then divide it by your gross profit percent, it will tell you what your break-even revenue is. And break-even is really, you know, if you're looking at your minimum outflows and breakout, or your thriving level of revenue is, you know, when your expenses really include, you know, how you really want to be living your life and running your business. Because maybe on a business level, you actually need to hire people. And so your thriving level of revenue would include those kinds of things. So debt payoff tips. There's often confusion between, do I pay off my debt? Do I save? What do I do first? And the focus really is on paying off your debt first, because once the debt is gone, then all those funds can be directed towards savings or investment in your business, or other things that are important to you. And truly, if debt has been an issue for you, stop using credit cards. Nothing will give you a greater sense of attraction than doing so. I was talking with a woman recently where this is a new concept for freezing your credit. She literally put her credit cards in water and froze them in her refrigerator. So another one is, don't pay off your debt too fast. The common thing is people throw as much money as they can, as fast as they can, at their debt. And what happens is you don't end up with any reserves. And then when the next unexpected expense comes up, you're right back into using credit. And it can also set up a cycle of deprivation. The tendency is to contract your needs, and it really does set up a downward spiral, because again, there's not the WIFM factor, the what's in it for you factor. Loan consolidation rarely works. What happens more often than not is people consolidate their debt, they can't make the payments, then they end up with even more debt. Then there's debt snowball strategies. And there's kind of two schools of thought. One is to pay your high interest debt off first, or pay your debts lowest to highest. And for me, I found that paying the debts lowest to highest is what really worked best, because there's a psychological factor. It's really exciting when you whack down, at least one debt, and then you roll the payment from that debt into the next one, and you get a snowball effect. And it's really surprising just how exciting that is, more so than just kind of plugging away at the highest interest rate debt. And if the highest interest rate debt happens to be a really big one, it just feels like it can take forever, and you won't get there. It also makes a huge difference if you pay a little bit more than the minimum. It's really shocking. And I can provide a link for how to look at it for yourself. It really pays to have a strategy. I looked at this for myself a couple years ago, and literally by paying an extra 50 or 100, I could knock like 4 or 5 years off of how long it was going to take to pay off the debt. And then savings tips, for your non-monthly expenses, figure out what they are, and then either put away a flat amount, you just divide the annual amount by 12, and you put that away on a regular basis. Or if you look at what your kind of a conservative annual income is and look at what percent of your income the annual non-monthly expenses are, then you can put a percent of your income aside. And that works well for people who have like big chunks of income, like real estate or mortgage brokers, where there's a lot of peaks and valleys. And this of course varies by individual, but if you have at least $1,000 set aside for emergency funds, so that if something unforeseen comes up, that you have at least some reserves. And then again, once your debt is paid off, to redirect those funds to savings or other financial goals. Talk to a financial planner about retirement savings, and also I should add there to talk to your tax preparation professional so that you make sure that you're saving enough for taxes. And then just some other general tips. One of the things I see a lot is the business and personal expenses are commingled. And when that happens, it's really pretty impossible to see how much you're actually making from the business. And then again, get clear about where you are with your personal and business finances and, set targets and so forth. One of the questions that comes up is when to hire a bookkeeper. And I think it's really important for business owners to understand their finances before hiring a bookkeeper. And it might happen simultaneously because hiring a bookkeeper can help you understand your finances. But I say that because sometimes what happens is business owners sort of abdicate responsibility. It's like, oh, I gave it to the bookkeeper, so it's all good. And one of the things that can happen, that happened to my brother, is that he had two bookkeepers in a row who embezzled. So you really do need to understand what's going on and what to look for. Save your estimated tax payment, create your budget, and then set up the monthly cash flow projection. And the combination of the annual and the monthly really puts you in the driver's seat of your financial affairs. And one of the things that people say a lot is, well, my income is so unpredictable. So how do I do that? And the thing about it is that, unfortunately, the expense side is pretty predictable. And if you're looking at how much revenue you need to generate to support you on a financial level, then you can be proactive about generating the revenue. And what tends to happen is those peaks and valleys tend to, even themselves out. So it really is important to, start with your best guess. We call it the swag method, the silly wild ass guess, if you don't have anything to base it on. So this is a lot in a short amount of time, but the key points are really to view your budget, your cash flow projections as a financial fuel gauge. And again, you wouldn't drive your car without a gas gauge. So it's really essential to get the financial fuel gauge in place on a business and personal level. And I like to think of it as giving your money a job. That you're deciding ahead of time where you want your money to go and what the purpose of those funds are. And then activate your money mojo by being clear about where you are, letting yourself want what you want. It's really a both and kind of scenario. It allows you to want what you want, but still be responsible and proactive on a financial level. And then get creative about what will support you in making the business support your life, in generating the revenue that you need and want. And, whatever the things are important to you to have happen in your life. Instead of thinking, oh, it won't work, it can't work, train yourself to think about what will make it work. And so it's really about taking on the challenge of making a difference, making a profit, and having a life. And it's challenging to do all three at the same time, but I think it's a worthy challenge. And my guess is you probably agree with that. So, on this road trip of life, it's really about, how do you make this your best year ever? And I think the budgeting, the financial clarity is really a key underlying action that you can take. And what I didn't say in the beginning is that in my corporate years and in the work I've done ever since, I actually went into finance because I thought it'd be the hardest thing to learn. And I'm kind of an off the scale intuitive. And so I figure if I can learn it, you can too. So thank you, and happy to answer any questions that I can.
Great. Does anybody have any questions so far?
Right, totally overwhelmed you?
No, I think it's, I think it would be cool with examples, but let me think of some questions that other people have asked. When you're doing a projection of finances, do you have like a spreadsheet that you normally do? I know that you had a slide of all the fields.
Yes.
And how much do you suggest that people spend in marketing? How much do you think that if they say they want to make, I don't know, a certain amount in their salary, how do they calculate that so that it incorporates like their taxes, like everything else, insurance?
So how do you calculate the salary goes back to the worksheet earlier on in the presentation of identifying your known personal sources of income.
Let's just go with like numbers, make up a number. Let's say somebody wants to make $20,000 in salary, right? So when they think about it, they always compare themselves to the corporate.
Right.
So they're saying, oh, but they don't realize the number. So it's that differentiation of like, well, if you want to make 20,000, and you want to bring home 20,000, you're probably going to have to, if you're especially in New York.
Oh, I see what you're saying. Yeah. So when you're figuring, well, there's two things there. It's so easy to compare to, a salary in the corporate world. And it comes back to the question of how much money is enough. And if you're looking at what's going to support your life and then look at it on a tax level, it's important to talk to your tax preparer to say, well, if I make $20,000, how much do I need to be setting aside in taxes? And to make sure that, if you need 20,000, none of us can live on 20,000, but at any rate, maybe you need to be setting aside a third of that for your taxes. And so it's kind of a iterative process, a back and forth process that, the more money you make, then you have to pay more taxes. So you kind of have to keep checking in on a quarterly basis, or at least, half a year basis, to make sure that you're setting aside enough for taxes. Is that what you're asking, Tanya?
Sort of. So like most people, when let's say they were making a $250,000 salary, right?
Mm-hmm.
And really their take home probably is going to end up being like 10 to 12K. So they estimate that they want to bring home the same thing for their salary in their company. But they don't realize that a lot of it's going to go to taxes, and then
Right.
and that's another topic about how to do write-offs. What can you do as a write-off? And then how do you calculate all of that and also not start comparing yourself to your corporate. So it was a bigger one, and I would have to show examples on how to go about it in spreadsheet.
Right.
But anybody else have any questions? Nobody? I know you guys are all mute.
So I'm curious what, your biggest frustrations are. What are the questions that you have about your finances? And finances are tricky. It's like I said in the beginning, people would rather talk about their sex life than talk about their finances. And, I've gone through my own challenges with my finances. So I have a lot of compassion, and I've learned a lot, through my education, but I've learned so much more really on a personal level of, having things going well, and then, an economic downturn and my income crashes and I build up debt, and, then dig myself out. So it's a challenging question, but it's also one that the more you look at it, address it, it really is empowering.
I have a question.
Go for it.
Can you hear me?
Yep.
Okay. Angelique. I do, I'm in charge of collecting our money, and cash flow is sometimes an issue. Mm-hmm. We deal with a lot of large companies who, whose terms are set, many, many, many levels above the people we deal with. Do you have a recommended sort of cushion? And we have a line of credit and we use it as needed, but if that is not available at any point, do you have like a recommended sort of cushion of, I don't know, how do you figure out, or how do you best figure out how much you should have kind of in reserve for, times when you're in a squeeze?
Right. So, kind of the standard rule of thumb is 3 to 6 months of either personal expenses or operating expenses. And at least for the businesses I work with, business owners, it really takes building that up. So to identify what that is, and maybe break it into small bites of, okay, let's save for 1 month of reserves, and then build up from there as you can. Does that make sense?
Yeah, sort of what one does sort of ideally personally, the same, it's just bigger numbers.
Right, exactly.
Okay. Okay, I just wondered if there was any recommendation, and if it's basically the same. So it does obviously take some time to build that up, but it is worth it.
Right, it's totally worth it. Because then you can step back and look at it strategically and say, what's it going to take to make it work? And you might find, for a lot of business owners, they figure that out and they go, oh, I don't want to work that hard. And so, it's really kind of a back and forth process of looking at, what's the lifestyle you want, and, what's going to take out of your hide, basically. And is it worth it?
Great. Thank you.
Anybody else? And you're welcome. My email is on the slide. So, I went through a lot quickly. And so, if you have questions, please feel free to reach out to me, and I can answer questions privately as well.
All right. Seems like no questions. Well, thank you so much, Linda. We really appreciate it.
Appreciate the opportunity.
All right. Take care.
All right. Bye-bye.